Good morning, everybody, and welcome to the presentation on why you need to learn how to read candlestick patterns. My name is Gail Mercer, and I am the founder of Traders Help Desk, and I'm also your hostess for this morning. Now, before we get started, I would like everyone to take a moment to read over the Nadex risk disclaimer. You know, anytime you're trading, whether it's with binary options, spreads, or any other instrument, there is risk involved. I also want to take just a moment to let you know this is part one of the presentation on candlestick patterns. I believe there's two components to this presentation. One is learning to recognize the candlestick patterns. Two is how to use them in trading, which we're going to be doing next Wednesday at the same time. So make sure you're registered for that presentation as well. Now, for those of you that do not know me, I have more than 15 years of trading experience. I did start out with a company that programmed indicators and simply fell in love with the price bar. I specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities magazine, Traders World, and Top Shelf magazine. I've also been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Conference. I'm also the author of Trading Nadex Binary Options, Keeping It Simple Strategies, The New Trader's Guide to Trading Nadex Binary Options and Spreads, as well as my latest book on trading Nadex binary options using currencies. All of these books can be purchased either on Amazon or my website. Now, I want to go over again what we're going to go through today. And basically, it's learning the different candlestick formations, whether it's a bullish bar, a bearish bar, or a multiple bar formation pattern. Now, in the past, I have given out cheat sheets that had these patterns on it. But I believe for you to learn these patterns and how to recognize them, it's actually better if you review the video and draw out the patterns. And I mean, even if you're just waiting on somebody to arrive or going out for a cup of coffee, start drawing the patterns, because the sooner you can actually recognize the patterns, the better you are in using them in your trading. Now, what is a bullish candlestick? A bullish candlestick on a chart can be represented either by a green candlestick or what we call a hollow candlestick. And I want to actually show you that on this one, you can see that it's got a little straight line at the top and a straight line at the bottom. Now, that is always called the wick. The bottom of the wick is used to identify the low. The top of the wick identifies the high. If it is a green or a hollow candlestick, then your open is going to be at the top of the body, which is the green portion of the candlestick. And the open is going to be at the bottom of the body, and the close is going to be at the top, okay? That is considered a bullish candlestick. Now, a bearish candlestick will either be represented by a red candle or a black candle. And in this case, the high is still the top of the wick. The low is still the bottom of the wick. The difference is the open and the close. The open will always be at the top of the body. The close will always be at the bottom of the body. Now, with a doji actually shows you that the open is equal to the close. A bullish doji will always have the open and the close at the top of the doji, in the top percentile. Whereas a bearish candlestick actually has the open and the close equal to one another, but they will be at the bottom of the candlestick. Also notice that these do not have a body okay? That's what makes it a doji. The open equals the close, therefore there is no body. A bullish candlestick typically indicates that the next bar will go up, whereas a bearish doji actually indicates that the next bar will go down. For example, this is a downtrend market, and you see there is a doji right at the bottom of the market. Okay, that indicates that the next bar will probably be a bullish bar. Okay, now a bearish doji indicates the opposite. Okay, it will normally occur in an uptrend. Okay, and if you notice, when I look to the right, to the left, there is nothing in the way of this candlestick. Now that typically indicates that the market is going to retrace on the next bar. The bar should be bearish. Okay. Now, these are also called pin bars. In a bullish pin bar, you see it has a long wick in the body of the candlestick is up at the top. On a bearish pin bar, you can see that the wick is on the top and the body is at the very bottom of the candlestick. Now, it's very important that you see the long wicks. That is what makes it a pin bar. Now, a bullish pin bar indicates that the next bar will also be bullish. A bearish candlestick pin bar actually indicates that the next bar will also be bearish. Now, let's look at 2-bar bullish formations. And it is very important that you're looking at the second bar in this formation. Jason, does it matter how big the body is on a pin bar or not really? As long as you have the wick and the wick is long, Jason, that's what matters, okay? Now, on this one, you see that we have a bearish candlestick followed by a bullish candlestick. Notice that the bullish candlestick exceeds the bearish candlestick. So the high is here, the low is here on the bearish. The next bar exceeds both the high and the low of the previous candle, and it closes above the high of the bearish candlestick. That indicates that the next bar will actually be an up bar. We also have, this is what I call the twin formations, and they look identical. You have a bearish bar down and a bullish bar up, but notice that the bodies are almost twins with the exception of the color. You have a bearish bar that goes straight down, followed by a bullish bar that goes straight up. This again indicates that the next price bar will actually be bullish. Then our last 2-bar bullish formation, we have the bearish bar first, followed by a bullish bar that also closes above the high of the bearish bar. So we have the high here of the bear bar, we have the low of the bear bar here. The next bar forms a bullish bar and closes above the high of the previous bar. That tells us that more than likely the next bar will also be bullish. We also have 2-bar bearish formations. And in this case, the bullish bar is first, followed by the bearish bar. In the first example, you see that the bearish bar closes under the low of the previous bar. That is very important because it tells you that the next bar is more than likely going to be a bearish bar. In this case, we have twins. Again, they're just opposite colors. For example, this is a bullish bar indicating that the market is going to go up, followed by a bearish bar that equals the previous bar but closes on the low or closes down. This makes it a bearish bar. Again, your expectation would be that the next bar would be bearish. Then on the last two bar bearish formation, on the previous bar, we have a bullish bar, but on the next bar, it exceeds the high of the previous bar, exceeds the low of the previous bar, and it closes under the low of that previous bar. The indication means that the next bar, more likely than not, will be a bearish bar. We also have 3-bar bullish pivots, okay? And this just tells you that the market is probably going to reverse directions for 3 to 5 bars. For example, this middle bar has made a low, and this is very important to have the middle bar as a low. The last bar closes above the high of that middle bar. It does not exceed the low of that middle bar. This indicates that the next 3 to 5 bars will be bullish bars, okay? We also have a 3-bar bearish pivot, and in this case, the middle bar forms the high. The last bar, which is your 3rd bar, is not higher than the middle bar, but it exceeds the low and closes under the low of the middle bar. This is a 3-bar bearish pivot and indicates that the next 3 to 5 bars will be bearish. They will reverse directions, okay? We also have what are considered 3-bar ghost reversal bars, okay? The key to a true pivot bar is that the close of the 3rd bar, if it is bullish, it must close above the high of the previous bar. If it is bearish, it must close under the low of the previous bar. Failure to do this makes it a ghost pivot. Now, it is not a true pivot, so you may not get that 3 to 5 bar reversal, okay? Sometimes you will, sometimes you will not. It's a ghost pivot. Now, this is typically what a ghost pivot looks like. You can see that this formed the low on the 2nd bar, but the 3rd bar was a bullish bar, and more than likely, the next bar will also be bullish. On the bearish, you see that the 2nd bar forms a high, and then the 3rd bar forms a bearish bar, but that it does not close beneath the low of the bullish bar. This makes it a ghost pivot, okay? Now, I realize some of you actually want to know what are the names of these candlesticks, okay? You can see this one is considered a bullish spinning top, but look at the actual formation. This bar is lower than this bar, and this bar closes above the high of this bar. This is a 3-bar pivot low, meaning that the next 3 to 5 bars will be bullish bars. Now, you can learn the name of it, which is bullish spinning bottom, or just know the formation, okay? Either way you go, it is the same thing. Here you see it is the bullish engulfing bar. This is very reminiscent of the 2-bar formation that I just showed you. The green bar exceeds the high and the low of the previous bar and closes above the high of that previous bar. The actual name for that formation is a bullish engulfing pattern. These are called the bullish tweezers. Notice how they form lows at the same point. This one actually closes in the upper percentile, but the close is less than the open, whereas on the next one, the close is greater than the open. The fact that this has formed that double bottom formation indicates that the next bar will be a bullish bar. This is considered the morning star formation. Again, notice the middle bar, okay? It forms a low with the next bar closing above the high of the middle bar. This is a 3-bar bullish pivot formation that is named Morning Star. This is your evening star formation. Notice that the middle bar is the highest bar. The third bar closes under the low of the middle bar. This is a 3-bar bearish formation, and the proper name for it is evening star if you're using candlestick names. We also have a gravestone doji. And remember, the open is equal to the close on a doji. In this case, the open and the close is right at the bottom of the candlestick. There is no body on the candlestick. It has formed a high. When I look to the left, there are no price bars. This is indicative that the next price bar will go down. We also have the hammer, and in this case, you can see that this one forms a low, and on the low, when you look to the left, there's no other bars in your way, and the next bar closes above the high of the hammer. This makes it a 3-bar pivot to the upside, or a 3-bar bullish pivot. We also have the inverted hammer, in that this forms a long wick, almost like a pin bar, but closes on the very low, okay? Then we have the doji right at the top of the market. And this particular doji I like because it's really, really small. You can see that the open is equal to the close. If you look to the left of the high of this bar, so if you're looking to the left, there's no other price bars in your way. This typically signals a very strong retracement area. This is also the gravestone doji, which I think I went over before, okay? And again, if you look at the high, go to the left. There's nothing in the way. This again signals a very strong move to as a retracement or to the downside. This one especially will be strong because not only is it a gravestone doji, but you also have the 3-bar bearish pivot formation because this bar closes beneath the low of this bar. This is what is referred to as a long-legged doji, in that it went up and it made a high. Again, look to your left. There's nothing there. This is the high for this little trend run here. Then they push it down and they push it back up, indicating indecision. The fact that this is at the top of the market tells me that more than likely the next bar will be a bearish bar, okay? And the fact that it closed under the low of the long-legged doji means that it's also a bearish pivot formation, indicating that the market would retrace for 3 to 5 bars. Now, this is called the Dragonfly Doji. It's almost the opposite of the Gravestone Doji. Gravestone Dojis happen at the top. The Dragonfly Doji happens at the bottom of markets. And you can see that it went down and it made a low and it pushed it back up to where it opened, okay? This is a Dragonfly Doji and actually indicates that more than likely the next bar will be a bullish bar. The fact that this bullish bar also closed above the Doji signals that you will probably have a 3 to 5 bar reversal off of the low, which was over here or down here. Any questions on these patterns? Now, I'm not going to explain how to trade them. That comes next Wednesday, okay? It gives you a week to review the video and draw out the patterns so that you will know what you're looking for in the presentation next week. Are we able to get a copy of this presentation slide? No, I don't make my presentations available in slide format, but they do record it and they post it later today so you can go back and review it. And, you know, if you go through the video and you draw these patterns out, it's more beneficial than just looking at them on the screen thinking, oh, I've got this. You know, it's engraving it almost in your brain when you actually draw it out yourself, in my opinion, of course. Now, before we end the presentation, I do want to give everyone my contact information. My website is tradershelpdesk.com and my email address is gm@tradershelpdesk.com. What tips can you give to a beginner? The first thing is learning these candlestick patterns and then learning where to trade these candlestick patterns. Next week, I'm actually going to show you not every candlestick formation is important to me. It depends on where that candlestick formation occurs, okay? And that's what we'll be going over next week. But again, you have to learn these first. I don't think you're automatically registered for next week. I think you actually have to go to the webinars and register. You know, people call these candlestick patterns all kinds of names. I don't really focus on the names as much as I do the pattern, because you can see, you know, a 3-bar pivot formation could equal, you know, evening star or morning star. It could be a doji. You know, the names do not matter. The names will not, you know, help you in trading. The formation, on the other hand, is vital. Any other questions? Well, I do thank you all for joining me today. I hope you enjoyed the presentation, and I hope you join us next week as well on Wednesday at 11 a.m. You too, Anita.